When you think of the best stocks over the last 20 years, which do you think of? Maybe the FANG stocks, Facebook, Apple, Netflix, and Google? If you had invested just $1,000 in shares of Apple 20 years ago, you would now have over $338,000. Now though, when you think of the best stocks to buy for the next 20 years, what comes to mind? It's not Apple, is it? You are not going to get rich on shares of Apple. Great company, but the tragic fact is it's a victim of its own success. For shares of Apple to produce that same return over the next 20 years, the company would have to grow to over $800 trillion. That's nearly 9 times the size of the entire global economy. Even for shares of Apple to grow your portfolio by 10 times, the company would have to overtake the size of the US economy. And it's the same problem in all the big tech stocks. Facebook, Amazon, and Google, these stocks of yesteryear have become a victim of their own size and their own success. In today's video, I'm going to show you how to find the stocks to buy today that could become the leaders of tomorrow, stocks with room to grow. I'll show you how to narrow your list and then reveal the 5 stocks I'm watching for those triple-digit returns. We're talking best stocks for tomorrow, today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue here, and you know we can't get started without that special shout out to all you out there in the Bowtie Nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, returns on shares of Apple and those other tech giants have been great over the last few years, and I'm not saying you can't still make 10 or maybe even 20% a year on those big name stocks. But those 10x stocks of tomorrow means looking for smaller companies with room to grow. For that, let's start on the screener here on StockCard, and I like the screener here for some of the filters you just don't get with a lot of other sites. We'll start here by toggling on high growth potential, so companies in those industries with high sales growth. We'll also filter for only small cap and micro cap companies, those with a market cap of between $50 million to $2 billion. Next, I also want to toggle this positive track record for sales growth and filter for companies with good cash availability, and I'm going to explain each of these filters and why we're screening for them next. I'll also filter for good management, and last year, I want to filter for only those stocks trading on the NYSE or the NASDAQ stock exchanges. That's going to filter out all those OTC stocks from the list. And that still leaves us with a list of 84 potential growth stocks, so I'm going to sort this list by lowest to highest market cap, so starting our research with those smallest companies first. I'll leave a link to StockCard in the video description below. As a special bonus, I've negotiated an exclusive discount for all you out there in the community. Use the promo code BOWTIENATION, that's all one word and lowercase, for an exclusive discount beyond the free trial. And first on our growth stocks list is $94 million Franklin Wireless, ticker FKWL, at around $8 a share. Franklin Wireless is a leader in hardware and software products for connectivity, and business has exploded over the last year. Its mobile hotspots and mobile device management drove sales during the pandemic, and the Internet of Things products and machine-to-machine applications gives it that better long-term growth. Revenue has surged over the last year, posting 105% sales growth in the last fiscal year and 185% revenue in the last quarter. The communications equipment industry is expected to grow by 18% annualized through 2027, so that growth is just getting started as mobile connectivity becomes more important for work and play. The company has over $59 million in balance sheet cash and less than $1 million in debt, so nearly 2/3 of the market value of this company is backed by cash. Analysts have an average target of $28 a share, more than 3 times the current share price, so definitely one to watch here. Next on our list of stocks to watch, before I show you a little more on how to find these, is going to be $233 million Co-Diagnostics, ticker CODX. The company offers a unique platform for development of molecular diagnostics tests and those designed for detection of DNA and RNA sequencing. Over the last year, it's benefited from those PCR tests for COVID detection, but it also benefits from growth in testing genetic markers, which has been useful in that vaccine development as well. The diagnostics industry as a whole is expected to post growth of 5 to 7% annually through 2025, but this part of it is likely to grow even faster. Sales growth exploded over the last year, up 34,000% in the last fiscal year on those PCR tests and COVID diagnostics. And even as that growth rate slows a little, there is a lot of room here in that genetic testing space, and the company is primed to take advantage of it. Co-Diagnostics has over $60 million in balance sheet cash and no debt, so this is another one here where a lot of that market cap is actually backed by cash, 25% in this case. And the company is growing cash flow at $22 million a year. Now, these stocks are not only strong growth stories, but that cash stockpile also makes them takeover targets as well, because a lot of that cash is like a discount off on the acquisition price. The average analyst price target here for Co-Diagnostics is $23 a share, a potential return of 185%, and this is also a long-term growth story. We've still got 3 more of those potential growth stocks to highlight, but I want to show you why we screened for each factor and how it fits into this theme. Now first, I'm filtering for companies in high growth industries because we want to focus on those groups like tech and biotech leading us into those biggest trends. I also want to limit our search to companies between $50 million to $2 billion in market size. Now $2 billion market cap might not seem like a small company, but if we're talking about growing into that next trillion-dollar giant, that still leaves a 500 times growth potential. Now, even if it were just to grow to a modest $30 billion company, that's still 15 times on your money. With this next group, I'm filtering for stocks with a positive sales track record and good cash availability. And one of the biggest reasons small companies fail is for lack of funding and that available cash, so you want to start off only with those with the financial flexibility to survive. I'm also filtering for effective management, and what we're looking at here is that high return on assets, or ROA, compared to other stocks in its industry. Now that's going to show us those companies where management is doing the best job getting more from those assets. And finally here, I'm going to be limiting the list only to those stocks on the exchanges, the NYSE and the NASDAQ, and none of those OTC or pink sheet stocks where you don't get quite as much financial reporting. Next on our growth stocks list, $673 million ChannelAdvisor, ticker ECOM. So ChannelAdvisor is quite a bit larger than those other 2 stocks, but still very much a small cap company with that growth that we're looking for. The company is an e-commerce platform helping brands and retailers drive digital sales growth. Now, ChannelAdvisor offers a one-stop channel management tool for retailers to sell on Amazon, eBay, Walmart, 140 plus other marketplaces. Really, it's an end-to-end e-commerce service with digital marketing to analytics and fulfillment. Sales growth in the last fiscal year was actually a little slower than I expected at just 11.6%, but it jumped 22% in the last quarter and should produce those double-digit growth as e-commerce continues on that long-term growth trend. This is another one with that strong balance sheet that I like to look for. $82 million in cash against just $9.5 million in debt and producing almost $30 million in free cash flow every single year. The average analyst target here for $32.50 a share is 44% above the current share price, so a solid double-digit near-term return on top of that long-term growth story. Now back to another smaller company here with $259 million healthcare services, Viemed Healthcare, ticker VMD. Now VMD is the largest specialized provider of ventilation in the U.S. home respiratory market, focusing on those COPD niche where patients spend over $50 billion annually in the U.S. alone. The company provides 24/7 home care, including devices and therapists serving 27,000 patients. Spending in this market is expected to almost double by 2028 to $98 billion, and that aging demographic is adding covered patients with more than 9 million Medicare beneficiaries through the 5 years to 2023. Sales for VMD grew 64% last year and 20% in the most recent quarter. And what I like about this one is a lot of that revenue is from recurring streams like monthly device rentals and services, so it's a sales base that is just going to keep on growing. The average analyst target of $13 a share is more than double the current share price, around $6 each. Next is a really interesting one, $361 million CollPlant Biotechnologies, ticker CLGN. And it's because CollPlant is one I'm personally rooting for, making us old-timers young again by developing technologies for tissue regeneration and organ manufacturing. The company creates soft tissue fillers in aesthetic procedures as well as 3D bioprinting of organs. The company has a collaboration agreement with AbbVie for up to $103 million in payments along with royalties on those sales, so very well funded here, and already has $50 million of cash against just $3 million in long-term debt. Now, like a lot of biotech companies, you're going to see these crazy sales growth numbers, like in this case 2,280% revenue growth last quarter, but that just depends on when those milestone payments come from partners like AbbVie. But even longer term, 3-year growth of 136% annualized is really amazing here. Now, analysts do have an average target of $26 a share, which is 44% above the current price, but that's only based on 2 analyst targets, so a little more uncertainty here. But it is hard to argue with that kind of sales growth. Click on the video to the right for the 5 stocks the pros are buying right now. 5 stocks with analyst buy recommendations and 50% or more return potential. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.